So you work hard, you're super busy, the jobs just keep coming in, but at the end of the month, you're left scratching your head. Where's all the profit? If you're tired of feeling like the business is the only one making money and not you, Profit First is the system that can change everything. What I find is that most trade businesses operate on a whatever's left over mindset when it comes to profit, meaning they pay the business before they pay themselves. But with Profit First, you flip that. So you pay yourself before the business pays its expenses, not after. In this video, I'll show you exactly how to set up Profit First for your HVAC, plumbing, or electrical business step by step. And stick around because I've created a free Profit First tracking worksheet that you can find in the description of this video. So the first question you're probably asking is, what is Profit First? Profit First is a cash flow budgeting system designed to ensure you always have profit, owner's pay, taxes, and operating expenses covered. So here's the problem with traditional accounting. Most businesses follow the formula of revenue minus expenses equals profit. So now you can see just by the formula what becomes the afterthought there. Profit. So Profit First flips that script. So revenue minus profit equals expenses. So this forces you to run your business on what's left over after paying yourself and setting aside profit. So this ensures that you're building wealth and not just covering bills. Step number 1 of setting up Profit First is to open 5 separate bank accounts to manage your cash effectively. So bank account 1 is going to be your income account. So all of the business's revenue goes here first. Bank account 2 is your profit account. Bank account 3 is your owner's pay account. That's all. That account is purely for what you get paid. Bank account 4 is your tax account. So all of your taxes, state, federal, and sales will go into this account. And account number 5 is your operating expenses. So that's everything else that's required to run your business. So why all these separate accounts? When all your money is in one place, as you probably know, it just gets spent. So with Profit First, you're compartmentalizing your cash. You're giving yourself visual budget representations, right? Each account can only be spent on a certain thing and only can be a certain amount can be spent. And so that helps keep more profit in your pocket. Quick tip, make sure you understand your bank account's management fees and minimums. If you find that your bank isn't Profit First friendly, consider switching to one of the many alternatives out there. As an example, RelayFi is the official banking partner of Profit First. They will let you create up to 20 bank accounts without any additional fees or minimums. All right, so step 2 of Profit First is allocating money to each of these accounts using the Profit First percentages you define. So you'll do this allocation twice a month. Typically, they recommend on the 10th and 25th of the month. You can do it more often, say weekly. You can do it once a month, whatever works for your business, as long as you're doing it is the important part. And you'll use these percentages I'll show on the screen here. These are going to be your initial starting percentages for that allocation. So the way it works, I'll use an example here that I'm business B and my revenue is in the $250,000 to $500,000 range. So on the 10th of the month, let's say I had $10,000 in revenue. So I'd have $10,000 in my income account. I will, on the 10th of that month, move 10% of that money into the profit account, so $1,000. I'll move 35% into owner's pay, $3,500. I'll move 15% into the tax account, $1,500. And I'll move 40% into the operating expenses account, $4,000. And there's a little bonus to this as well. So every quarter, you can also take half of your profit account as a reward for being a successful business owner. And then the other half stays in the business as a reward or growth. But here's the key. We want to dial in these percentages so that we never use our profit account for business expenses. So it's supposed to be the reward, the growth account. Don't want to use it as a backup operating expenses fund. So now step 3 is the easy one. You already have your account set up. You have your allocation percentages defined. Now you just need to make those transfers twice a month and stay consistent with Profit First. Instead of micromanaging your cash flow on the daily, you'll be able to see your amounts in each of the accounts on the regular basis. You can fine tweak and adjust the percentages, but what you really need to be sure of is, should you be making the adjustment or should you be trimming the fat? For instance, if your operating account is consistently not covering your bills, is it because you have unnecessary costs? You haven't negotiated with your suppliers? Just be careful about pulling too much out of profit or owner's pay or one of the other accounts. Remember, if you can't afford your expenses after taking a profit, you're running the business too lean. Again, check your expenses, check your prices, and trust the process. Your profit and cash reserves will grow over time. Here are the most common mistakes I see with the Profit First system that absolutely wreck its effectiveness. So mistake number one is not setting up the 5 separate bank accounts. So money's gonna get mixed up if it's all in one account. If you're trying to track it with a spreadsheet, it's gonna be really difficult and time consuming, and you're ultimately gonna lose control of it, and you lose the effective nature of the cash flow and budgeting that Profit First provides. So set up the 5 separate accounts and make sure you're not paying any extra fees to do so with your current banking provider. Number 2, skipping allocations or transfers when the cash is tight. So Profit First works because it's a system, and it's a system that you commit to. So if cash is tight, let's get to the root cause of those problems. Let's not necessarily just skip the allocation entirely. We need to understand why and fix the root cause. And number 3, using the profit account as the business's emergency fund. So profit is supposed to be the reward. It's supposed to be the growth of your business. It's not a backup of your operating expense fund, so let's not treat it that way. So if you want to make implementing Profit First even easier, you have 2 options. Option 1, check with your bank to see if you can automate these transfers. I know Relay Financial supports a Profit First automation, so then this would be almost a hands-off process and you just see the money appear in your accounts. Option 2, grab my Google Sheets resource here in the description. You can input your allocation percentages, you can input your revenue, and it'll tell you how much to transfer into each of the accounts. Let me know in the comments, what's your biggest challenge with regards to cash flow? Has Profit First helped it? I'm Austin with Accounting for Trades, where we help plumbing, HVAC, and electrical small business owners by plugging profit leaks and keeping cash flowing. Thanks for your time. I'll see you on the next one.